pieces, right? You know the fastest way a successful person fails? Anybody know? It's because they don't know why they're successful. That's a huge piece, right? And then everyone now is talking about like what's going on in the market. There's a market shift, kind of what's happening right now. We're seeing stuff change. Well, knowing why that is and being able to adjust properly is going to be a huge piece of that. Knowing your numbers is the first line of defense, or the first line of knowing how to adjust. But beyond that, you really got to know what's going on in the market. And here's the real question. So majority of you folks in here are wholesaling. Some folks are investing, but what do you tell people like what you do? What is it that you do? You're a real estate investor, right? Okay, well, are you really investing in real estate? Like, is the real question. I mean, are you investing money or are you a marketer?
So most people in this room are not real estate investors.
That's exactly it. That's a huge piece, right? So, okay, you've been telling everybody what you do, and it's not even really what you do. Like, what do you know about the real estate market? That's what it really comes down to. So I'm going to talk to you guys about how to really understand the real estate market so you can know where to market, like where to actually put your marketing dollars, what you actually do, and how to make sure that you're hopefully taking advantage of the market and not getting caught by a shift that you're spending $20,000, $30,000 a month in marketing, and all of a sudden you're marketing to the wrong source because X, Y, and Z happens and there's no buyers, right? So a couple of things I want to talk to you guys about, just kind of general market analysis. What real estate investors are doing that marketers aren't doing. You know, what it really comes down to. So a real estate developer, before they do a development, or a real estate investor, before they spend a bunch of money on an office tower or a retail development or whatever, they want to know what's going on in that market. Okay, how many rooftops are there? Well, guess what determines how many rooftops they're going to be? If the folks can pay for the damn rooftop, right? Can they buy a house and can they rent a house? Well, what determines that? Their job, right? Their employer. So what we got to track is where the employers are. You know, a lot of folks in here are probably really successful right now because they're in a hot market, not because they're really successful. And knowing that's huge before the market shifts. Because once the market shifts, you're on your ass. What you've got to know is what makes you good, and then apply that to whatever market or whatever you're going to be doing. Because if it's just a hot market and the hedge funds are coming in and paying 90 cents on the dollar for rentals, 95 cents on the dollar for rentals, that's all well and good until they slow down and you're still churning out $30,000 a month in marketing, all of a sudden your numbers fall off the bottom. You know, then, you know, I don't know how much you've got in reserves, but it's going to go fast when you've got a payroll and you've got you know, marketing spend going out there, and all of a sudden the lead flow isn't coming in, and the numbers that make this sheet work don't work anymore. So what we're going to talk about is a couple places to get that market analysis and how to really track it. So like I talked about, you know, employers are one of the biggest things to track. You know, are the employers in your market actually, you know, increasing their staff? Are they increasing the amount they're paying their employees? You know, are new companies coming in that are bringing jobs? And, you know, what's the price point that they're paying these folks? Are they a new company that comes in, are they warehouse employees making $35,000 a year? Or is it a corporate headquarters and they're paying them, you know, Amazon, they're paying them $150,000, $180,000 a year? And is that above what your market average, you know, median income is? If it's above, well, guess what? That means higher priced homes in that area are going to go up. Put your marketing dollars there, right? So knowing these couple of things going into this is going to change how you make every decision on what you're doing and making sure that you don't fall into a trap. Because really, the majority of folks that are kind of in this industry and in the real estate industry as a whole are kind of sheep, right? They're just kind of following what the news is telling them. They're following what everyone else is doing. But that's not how you make a bunch of money. When there's an uncertain market, you go against the grain and you find the deals. You find out where the money is because everyone else is going to be shedding away. I mean, you look at 2008, 2009, 2010, people made a fortune. You know, Sean was doing his podcast telling everyone what to do. Well, guess what? Because everyone was scared out of their ass. Everyone was so fearful of what was going on that they couldn't make decisions. Except a lot of the folks in here said, okay, yeah, houses are selling for 20 cents on the dollar, 30 cents on the dollar. I need to be investing there now. I need to be buying deals. And guess what? People who were buying rentals in Phoenix in 09, 10, 11, shit, they probably saw 300% upside now, right? I mean, just crazy numbers.
More than that, yeah.
So what if you knew what markets and what areas to go after to start looking in those areas before the market shifts, and have the skill set to do what it takes so you know what to do and be prepared when the market shifts. In addition to hedging your risk so that you're not caught in your heels when it does shift. We know it's coming. I don't know when it's going to occur, but it's gonna happen, so.
So what are the leading indicators? They're sitting there in their market, right?
Job growth, right?
Job growth is something that's good, but now, what is something that they can watch on a monthly basis that will give them an indication that they're,
What would you watch?
yeah, what'd you watch?
What do you watch?
So CBRE.com, one of the biggest commercial brokerages in town, or in the country, in the world, I think. They've got market studies. They're free and they have a more detailed version you can buy. But you can do monthly market studies on what's going on in your market, what are the employers, what are the vacancy rate for office. You know, if office vacancy rate increases, well, guess what? It's probably a good sign that they're letting employees go, or they're not taking more employees, or whatever it might be. And then there's less jobs. Less jobs means less people to buy houses, or less people to rent houses. So I'd be tracking that. It's a really, really good source.
So inside that report, what specifically do you look at that would make a decision on what you would do in your business?
I'd be looking at job growth. I'd look at new employers that are coming into town and employers that are leaving.
And you would look at for a specific area to actually drop direct mail in, or would you look at?
Yeah, would you
what
be
would you
that
look at?
detailed at that level with it, or would you
Well,
just say market in general?
I would do the market in general. I would start nationally, and then I'd go regionally, and then I'd go to your city, and then I'd see what kind of data I can go from there. Once you're in your city and you start understanding it, and you really start seeing it, and you start reading the paper, and you start seeing, okay, well, there's a hospital going in here, the university's expanding, Express Scripts or Walgreens or whoever the hell the employers are in your market, and they're putting jobs on the table? Okay, well then go and look in that market, and then figure out what price point those jobs are coming in at or going out at, and then that's where you're going to know at what price point house and what location and what specific metrics you need to be looking at. That's what I've been looking at.
So if somebody's looking at average days on market off MLS and the inventories on MLS, although it's better than nothing, the reality is those are lagging. It's already happening, right? You're already in it by the time that's going on.
Absolutely, and that's what everyone else is looking at.
Right.
Screw that, we're gonna be way ahead of that.
Right.
So
By
that's
by the time you're actually looking at those numbers, the game is already being played, right? And you're trying to get the
Depends on, I mean, from a wholesaler perspective, and we're doing that gauges, if we're going against inventory, what we can buy and sell on a quick basis. If we're talking about investing and you're buying stuff like commercial, you want to know way ahead of time what's going on way ahead of time, because now you got real money into the deal and you got an asset that's going to be hanging on for 3 to 5 years, and you want to know if there's a market swing. So, I mean, if you're fixing and flipping, yes, inventory is a lagging indicator. You want to kind of know what's in that market. If you're wholesaling, you're in and out within days. Do you know what I mean? So inventory is a gauge on offering.
Which you're making a really good point, which is all the more reason, frankly, if there's any market uncertainty, the hedge is what? Wholesaling.
Yeah, wholesaling. I mean, yeah.
So everybody
should be
understand?
wholesaling.
If you're buying and taking a position, if you're not real sure what's going on in your market, but you're buying and taking a long position, or you're basically taking a position of, I want to get into the fix and flip game now because I think I'm really good at wholesaling, I would be very, very cautious about doing that right now. Because that's unless you've got some solid data that supports your theory, I'd be really cautious.
I mean, yeah.
That's how a lot of people got hurt.
If you're fixing and flipping and your spreads are $15,000, $20,000 and you're in a real tight margin and stuff like that, you got to pass on those deals. If you can get spreads 100,000 plus and you have a big enough cushion right in there that you can drop $20,000, $30,000, $40,000, $50,000 in your price and you can still make money on it, then that's, you can do something like that. But as a whole business model.
Or if you're flipping, just pad the numbers. Plan on holding it twice as long and cutting your margins by 25%. If the deal still looks good then you're probably fine.
Well, there's two pieces to that, right? So you're absolutely right. Wholesaling is the hedge. Wholesaling is the thing that you're in and out fast, inventory helps. But what happens when you're spending $30,000 a month in marketing and you've got overhead and all of a sudden your buyer pool falls? So what does 3 or 4 months of readjusting and kind of being back on your heels, what's that cost you? You lose the opportunity of the income where you also have all the expense you're still funding. So if you can get ahead of it and look at it like a commercial investor or developer looks at stuff, and you can apply that logic to wholesaling, it's going to put you on a whole nother level where you're not only going to get caught in your heels, so you're hedging your risk on the downside, but on the upside, you're knowing exactly what to do when everyone else doesn't. And you're making decisions outside of what everyone else is already doing. Right, what are you saying?
Okay, crazy question. So it sounds like to me, based on vacancy rate, that would be a lagging indicator. That makes sense to me. Our very first marketing campaign, was based off the SMART tool, where we overlap vacancy and the maximum number of cash buyers in that area. However, I believe that our marketing campaign didn't work as well as I believe it should have, because we're trying to wholesale, and the vacancy rate is a lagging indicator. And when I was speaking to cash buyers, they have since moved to another market. So, based on what you're saying, how do we leverage this type of information with the system that we have in place to use as a tool?
One clarification. Vacancy, when I'm talking about vacancy, I'm talking about office and retail vacancy.
Okay.
Commercial vacancy, because those are where the employers are.
Okay.
If the employers are vacating space, they're probably not hiring new jobs, they're probably lessening the jobs that they have. So that's more of what I'm talking about. CBRE is a commercial real estate website, so you can track that data.
Okay.
The vacancy in SMART is actually an indicator of distress, because you have a vacant property, that means
Okay.
someone's walked away from a property.
Okay.
So those are essentially, those are good leads in a high cash buyer market, if someone's walked away from a property. So it's just getting to those people and negotiating, making offers on them, making the right offers on them, following up with, that's the whole system in place. They'll create that conversion. What happens, I see a lot of people, they'll get data, they'll send mail. If they don't make $15,000, $20,000, they go, oh, it didn't work. That the money's not made on that. It's made on that list, mailing it 6 times, and then having basically a dialed-in follow-up sequence, a dialed-in offer sequence, right? Everyone comes out, I mailed it, it didn't work. Why didn't it work? And they blame the list, they blame this, when actually their process sucks and they don't understand direct mail.
Right. And I'm just trying to figure out how to use the information that you gave me to leverage also the tools we have.
Yeah, absolutely. So
Okay.
they're separate. No,
Okay.
100%. So,
And if you're
so
not there yet, excuse me for jumping.
no. This stuff's complicated, right? So
Right.
the key is like, it's not going to make perfect sense to folks that haven't looked at it this way right out of the gate. But the key takeaway is know that it's out there and spend the next 6 months digging into it and understanding it, because that's going to put you so far ahead of everybody else. You're not just going to be following the path. You're not going to be following the stream that everyone else is doing. You're going to be actually having natural thought. You're going to understand why the market's moving the way that it is, so that you can apply whatever specific business model that you're rolling out for your market. You can apply it to the right channels.
Okay, Robert, we talked about marketing budget, how getting caught marketing budget, and then all of a sudden have a couple slow months because of this indicator or whatever, and then now you're stuck and stuff like that.
Sure.
But we just went through, and we basically said, for Jared, JR here is like, he's gonna do, $267,000 of marketing, his goal with a lead number, right? So how does he get ahead of that when you're spending money on a weekly basis to making a decision where in the indicator of those KPIs drives you to make the correct, so you either, because you pull back, now you got leads coming in, right? But if you're pulling back on the wrong data and everyone else is pushing in,
Right.
you know what I mean? It's such a
Well,
fluid type of
things
thing.
aren't bad everywhere all the time.
Yeah,
That's the bottom line.
Right.
There are markets where things are exceptional,
Right.
right? Even when things are bad.
Right.
I mean, that was part of the reason why Memphis Invest exploded.
right.
Is because while everything else was melting down,
You were going all in.
we went all in on Memphis because
Right.
it was just slow and steady, right?
You had the market info.
Because we had the
You knew what
data
was
that
going on.
said Memphis and Dallas and these markets were just, they weren't going like this, but they weren't going like this
Yeah,
either.
but the cash buyers were in, they were still buying.
And they were all still buying. So the
Right.
idea is not that, I mean, the information to your point, having the data that understands what's going on in your market, but equally what's going on in markets that are around the country and understanding that kind of stuff.
Right.
Basically, here's the bottom line. Do not be an ignorant fool. Right? That's the bottom line. Because you can be.
Thanks for coming.
Because you can be. The reality of it is you can just turn a blind eye to all this and not look at any information. The point, until we started going out and mining cash buyer data, nobody had ever even heard of that. Right? But the information was there the entire time. It was always there. All we did was just go get it. And the same thing with private lenders. The information is there, is my point. And to your point, and if you'll just go get it, whether it is through CBRE, whether it is through Case Shiller, and some of these industry
Shiller's a huge
reports,
one, yeah.
pay attention. Now, in a lot of cases, specifically on residential real estate, many cases they're talking about retail residential real estate, which is not always what we do,
Right.
but it is information, right? And a lot of times when they're looking at it in hindsight, what he's telling you is that which is really important, is that even before it gets to that point, there's a level above where at a commercial level, if employers are cutting back or they're not hiring or there's no job growth, then all that other stuff kind of trickles down. So if you can get the information at one level higher, it allows you to get ahead of it. Even if it's by 2 or 3 months, if you're spending $25,000 a month, 2 or 3 months is 75 grand. That could be placed in a different place where you can get profit versus putting it in a place where the market's kind of slowing down and it's coming. Make sense? Go ahead.
I get that, Kent, but then where are your cash buyers? Are your cash buyers now shifting that
Of
way?
course, yeah, they will shift as well. And they will shift, they will not do it.
Well,
Institutional cash buyers will be ahead of it,
Right.
right? Hedge funds, banks, big companies, they're going to look at the same data. And what happens is when they shift, all the moms and pops shift with them. And it's not like they all get in a room and decide that's what they're going to do. They just naturally kind of gravitate that way. The good thing about the cash buyer data is you can track that data like we do, where you can see the highest volume zip codes. Hey, this is the zip code where I just showed these guys in one of our data. Hey, here's the zip code in Dallas. There's one zip code where there's 270 cash transactions that took place and the average profit was $35,000.
In 1 month.
In 1 month. Guess where I'm going to go start marketing, right? I mean, there's only 180 zip codes in Dallas Metroplex, but this one zip code has got that many transactions at that big a spread, probably makes sense for me to go there. And if you track that kind of data, then you'll just be ahead of the game. You'll just know, because what was the zip code before? And what you'll probably see is that there's this trend. It was 200, it was 220, it was 250, it's 260, it's 270, and it's going like this. And when it starts dipping, there's some other zip code that's kind of taking it back. Because here's what happens. Even in a good market and bad market, I can tell you, somebody's buying.
Yeah.
Always.
Well, look at it in 2010, like in the Valley, right? If you're investing in the Silicon Valley area, I mean, tech industry blew up coming out of the recession. And houses were just raising like crazy. You couldn't buy enough. All that foreign money's flocking there. Well, the world's falling apart. Everything's going nuts. Memphis, Dallas, and these other markets are going crazy. So there's markets out there that are making money. I don't know who wants to.
Yeah, the thing with wholesale, I wholesaled through 2005, through 2008 downturn, and then up through the going back up where we are right now. So during that time frame, as a wholesaler, what's great about it is because our only risk is our marketing dollars or maybe our staff, right? So if you look at that, all we do is we take this data, take the information, get ahead of it, and then we adjust our offer prices. So instead of offering 75%, you can sell at 80%, super hot market, you gotta offer 40%, you're gonna sell it at 55%. You're still making 15 points, right, on a particular spread, but now you're offering lower.
Correct.
And what you gotta do is use all this data to negotiate with the seller to get the lower prices. So all you're doing is adjusting your offer. That's why you gotta stay in front of it and really know what's happening with inventory in the market. We collect all these news articles and just use it as a negotiation tool with the seller to get lower offers to sell lower.
I forgot about that. You were talking about that.
One question, go ahead.
I know.
Go ahead.
I saw a podcast you did about building credibility. So how are you building that credibility with that seller? I mean, they might not take your word for it right away. Saying the trend.
He has the news articles, is what he just said. So he brings those
You're
in.
bringing it with you. Showing
Yeah,
them.
we have news articles. We just show them. We build it. We have an iPad presentation. We go through it and all that type of stuff. So it was part of our presentation that we build in. So when we're doing that iPad presentation, or my sales guys doing the iPad presentation, they're referencing. I mean, I have a thing on my phone called Flipboard, and I'm tied into real estate. So all it does, it gives me everything that's going on in real estate in the U.S. And I'll take different articles of things that are, now most of the news has been good, but as the news, if these, hey, this is, permits are dropped, or this has happened, and any type of indicators, we'll use it as marketing, as a negotiation.
Yeah, so there's a couple pieces there, right? This is the mastermind. I'm trying to figure out the best way to do everything. Everyone's putting their thoughts together, right? Well, Sean's talking about absolutely knowing your numbers. That's the first step. You know your numbers, you know what it costs to get a deal, you know what the spend is. Well, then what if you then take that and you apply it to the right markets where you're either pulling out of the markets that aren't working and putting into the markets that are working. Well, now you've got a full game plan, a full playbook to actually ensure that you're successful going into a bad market, and if really successful coming into, once the market bounces and you pop up. Because you've got the natural thought and you've got the skill set now to focus on where it makes the most sense to buy assets, to market where all the cash buyers are going, you're looking at the same data that the hedge funds are that are 6, 8, 12 months ahead of what everyone else is doing. Yep.
Rob, do you look at like tax benefits and tax incentives, like Puerto Rico? There's huge incentives to invest there, right? Like the new opportunity zones across the U.S. and like the low income areas.
Yeah.
Lots of money's coming out in the stock market to those areas.
Yeah.
You know, those are your buyers now.
Absolutely. I mean, that's what all real, if you start looking at the commercial level, that's what real estate investors and developers are looking at. They're looking at all that data saying, where's the best areas? And some folks don't want to invest outside of the market, some folks do. But if you can take that same level of data and you just apply it to your market and you say, okay, well, I'm going to apply to these 3 zip codes, I'm going to be over here to these 3. Because like Kent was saying, this one in Texas and one in Dallas is skyrocketing up and it's coming up at a hot pace. There's probably another one that's fallen down because of X, Y, and Z. Maybe the biggest hospital moved from one side of the city to the other side of the city, and all the jobs are moving over there because, I don't know, commute's 45 minutes or some shit.
Money's like water, guys. It's looking for the path of least resistance. It just doesn't ever go away. It's just looking for the path of least resistance. So just remember that. Even through a down market, if you guys are smart, your business will grow. You'll just go right through it. Because the transactions still happen.
Play off of fear. There's so much opportunity in fear. That's where we're going to be. We're kind of already there. Everyone's talking about it. It's coming. I don't know, is it 6 months, 8 months, 12 months, 18 months?
Yeah, we're kind of
there.
perpetuating the myth right now. All right, we are, Rob, anything else before we let them go to break? Sean, anything?
No, we're good.
Okay. We are going to break. It is 11:15. We are going to meet in the room.